Free cash flow versus future growth. Can COWZ ETF beat the market? Today we're diving deep into the COWZ ETF, also known as the Pacer US Cash COWZ 100 ETF. This ETF promises to deliver returns based on companies with serious cash flow generation. But is it all moo-vellous, or are there some hidden risks lurking in the pasture? We'll be dissecting the nitty-gritty of COWZ's strategy, including how it picks its holdings, the tax implications you might face, and even whether you could replicate it yourself for potentially bigger profits. So, buckle up, ETF enthusiasts, because we're about to uncover the truth behind the COWZ. Question 1. How liquid is COWZ ETF? Here's an analysis of the liquidity of COWZ ETF. COWZ likely has good liquidity. High trading volume. ETFs generally trade throughout the day, and COWZ, with a size of $13.5 billion, as of sources in March 2023, is likely to have a high trading volume. This means a large number of shares are bought and sold daily, making it easier to enter and exit positions without significantly impacting the price. You can check current trading volume data on financial websites. Underlying assets. COWZ tracks the top 100 companies in the Russell 1000 index, based on free cash flow yield. The Russell 1000 represents large-cap U.S. companies, which are typically very liquid. This means buying or selling COWZ shares translates to buying or selling shares of these large, liquid companies. However, liquidity can't be guaranteed. Market conditions. During volatile market conditions or periods of lower overall trading activity, even large ETFs might experience lower liquidity. This could lead to wider bid-ask spreads, the difference between the highest price a buyer is willing to pay and the lowest price a seller is willing to accept, and slightly more difficulty entering or exiting positions quickly. Order size. If your order size is very large compared to the average daily trading volume, it might be harder to find a counterparty for the entire trade at once. You might need to break up the order into smaller chunks or accept a slightly less favorable price. Question 2. What is the detailed breakdown of the sector allocations within COWZ ETF? COWZ ETF allocates holdings across various sectors, with the top allocations leaning towards cyclical sectors. Here's a detailed breakdown based on available data, as of April 3, 2024. Major sector allocations. Energy minerals, 24.6%. This is the largest sector holding in COWZ. It includes companies involved in the exploration, production, and refining of oil, gas, and other mineral resources. Examples within COWZ might be Valero Energy, VLO, or ExxonMobil, XOM. Consumer discretionary, 17.10%. This sector encompasses companies that sell non-essential goods and services, often sensitive to economic conditions. COWZ might hold shares in retailers like Home Depot or discretionary automakers like Ford. Healthcare, 13.4%. This sector includes companies involved in pharmaceuticals, biotechnology, medical devices, and healthcare services. Examples in COWZ could be AbbVie, ABBV, or CVS Health, CVS. Industrials, 11.98%. This sector represents companies involved in manufacturing, construction, and transportation. COWZ might hold shares in aerospace companies like Boeing or industrial conglomerates like Honeywell. Materials, 10.56%. This sector includes companies involved in the production of chemicals, metals, and other basic materials. COWZ might hold shares in chemical companies like Dow or building material suppliers like Vulcan Materials. Other sector allocations. Information technology, 9.20%. This sector includes companies that develop and sell software, hardware, and other technology products and services. While not the biggest allocation, COWZ might hold shares in established tech companies. Consumer staples, 7.22%. This sector includes companies that sell essential goods like food, beverages, and household products. These companies tend to be more defensive during economic downturns. Communication services, 4.16%. This sector includes companies that provide telecommunication services, such as wireless carriers and internet service providers. Utilities, 2.24%. This sector includes companies that provide essential utilities like electricity, water, and natural gas. Other, 0.43%. This might include companies that don't neatly fit into any other sector classification. Question 3. What is the methodology for weighting companies within the Pacer U.S. Cash COWZ 100 Index? The Pacer U.S. Cash COWZ 100 Index weights its holdings based on trailing 12 months, TTM, free cash flow, with a 2% weight cap applied to each company. Here's a breakdown of the process. 1. Universe selection. The index starts with an initial universe of large-cap U.S. companies, typically those in the Russell 1000 index. 2. Free cash flow focus. Each company's TTM free cash flow is calculated. Free cash flow represents the cash a company generates after accounting for its operating expenses and capital expenditures. Companies with negative free cash flow are excluded. 3. Ranking by free cash flow yield. Companies are then ranked based on their free cash flow yield, which is calculated by dividing their TTM free cash flow by their current market capitalization, share price multiplied by outstanding shares. Essentially, this prioritizes companies with a higher free cash flow relative to their market size. 4. Top 100 selection. The top 100 companies with the highest free cash flow yield are selected for the index. 5. Weighting by TTM free cash flow. Here's where the weighting magic happens. Each of the 100 companies' weights are based on their TTM free cash flow. The company with the highest TTM free cash flow will have the highest weight in the index, and so on. Crucially, there's a 2% weight cap in place. This prevents any single company from dominating the index and ensures diversification. Even the company with the absolute highest TTM free cash flow won't exceed a 2% weight. 6. Quarterly rebalancing. The index is rebalanced quarterly to reflect changes in the underlying company's free cash flow and market capitalizations. Companies can enter or exit the top 100 based on their updated free cash flow yield, and weights are recalculated within the 2% cap to maintain the desired exposure. Key points. The methodology focuses on companies generating strong free cash flow, a sign of financial health and potential for future dividends. The weighting by TTM free cash flow rewards companies with superior cash generation capacity. The 2% weight cap prevents overconcentration in any single company and promotes diversification across the 100 holdings. Regular rebalancing ensures the index reflects the evolving free cash flow performance of the underlying companies. By understanding this methodology, you can gain insight into how COWZ captures companies with robust cash generation and aims to deliver returns based on their free cash flow potential. Question 4. How frequently does the underlying index composition rebalance? The underlying index for the Pacer U.S. Cash COWZ 100 ETF, COWZ, the Pacer U.S. Cash COWZ 100 Index, rebalances quarterly. This means the composition of the index, including the specific companies included and their weightings within the index, are reviewed and adjusted on a quarterly basis. Here's a breakdown of the rebalancing process. 1. TTI free cash flow and market capitalization update. Every quarter, the TTM free cash flow and market capitalization of each company in the index are recalculated. 2. Free cash flow yield re-ranking. based on the updated TTM free cash flow figures, each company's free cash flow yield is recalculated. The companies are then re-ranked based on their new free cash flow yields. 3. Top 100 Selection Weighting Adjustment. The top 100 companies with the highest free cash flow yields are chosen for the index. Companies with negative free cash flow are excluded. Weights for the remaining 100 companies are adjusted based on their TTM free cash flow, adhering to the 2% weight cap per company. This ensures the companies with the strongest cash flow generation have the highest weight, while still maintaining diversification. 4. Index composition changes. Companies can enter or exit the top 100 based on their updated free cash flow yield ranking. This means the specific companies in the index can change each quarter to reflect the evolving financial performance of the underlying holdings. Benefits of quarterly rebalancing. Maintains focus on free cash flow leaders. Regular rebalancing ensures the index stays tilted towards companies with the most compelling free cash flow generation, reflecting the core investment strategy of COWZ. Adapts to market changes. Quarterly adjustments allow the index to adapt to changes in the market. Companies with declining cash flow performance might be replaced by those with stronger cash generation, keeping the overall exposure relevant. Promotes efficiency. Compared to daily or weekly rebalancing, quarterly adjustments are more efficient, reducing transaction costs associated with frequent buying and selling of holdings. Understanding the rebalancing frequency is important because it highlights the dynamic nature of the index. The companies you invest in through COWZ today might not be the same ones held in the future. It can influence portfolio turnover. Frequent rebalancing can lead to higher portfolio turnover within the ETF, which could have tax implications for investors in taxable accounts. Question 5. How does COWZ ETF manage concentration risk within specific sectors or industries? COWZ ETF implements two key mechanisms to manage concentration risk within specific sectors or industries. 1. Diversification through top 100 selection. Spreading investment across sectors. By selecting the top 100 companies based on free cash flow yield from a broad universe, typically the Russell 1000 index, COWZ inherently achieves some level of diversification across various sectors. Even with a cyclical sector bias, like energy or consumer discretionary, due to their free cash flow characteristics, the fund avoids overexposure to any single industry. 2. 2% weight cap per holding. Limiting dominance by any single company, this is a crucial feature. The 2% weight cap on each company within the index prevents any single industry leader, even one with exceptional free cash flow, from dominating the entire portfolio. This ensures no single sector or industry can have an outsized influence on the overall performance of COWZ. However, it's important to understand limitations. Sector bias. Due to the free cash flow yield focus, COWZ might naturally gravitate towards cyclical sectors that tend to generate higher free cash flow during economic booms. This can lead to a higher weight towards these sectors compared to a market cap-weighted ETF like SPY, which tracks the SP 500. Concentration within sectors. While the 2% cap prevents overall dominance, there could still be some concentration within specific sectors. For example, if several energy companies rank highly in free cash flow yield, they could collectively represent a larger weight within the energy sector, even if each remains below the 2% individual cap. Here are some additional points to consider. Monitor sector allocations. Regularly check the fund's website or financial websites for the most up-to-date sector weightings. This transparency allows you to assess the level of concentration within specific sectors. Diversification beyond COWZ. Consider using COWZ as part of a broader portfolio allocation strategy. You can combine it with other ETFs that focus on different investment styles or asset classes to further mitigate concentration risk. Overall, COWZ employs a strategic approach to manage concentration risk through diversification and weight capping. However, it's essential to be aware of the potential for sectoral biases and the limitations of these methods. Question 6. How does COWZ ETF define and calculate the free cash flow yield for its holdings? COWZ ETF defines free cash flow yield, FCFY, specifically in the context of its holdings selection process. Here's a breakdown of the definition and calculation. FCFY definition for COWZ. FCFY represents the cash flow available to the company after accounting for its operating expenses and capital expenditures, divided by its market capitalization. Operating expenses encompass the day-to-day costs of running the business, like salaries, rent, and materials. Capital expenditures represent the money spent on acquiring or upgrading physical assets, like property, plant, and equipment. In simpler terms, FCFY indicates the cash a company generates relative to its current market value. It's a profitability metric that considers not only how much cash a company makes, but also its current valuation. FCFY calculation for COWZ selection. 1. Trailing 12 months, TTM, free cash flow. COWZ uses the company's TTM free cash flow. This figure represents the company's cash flow generation over the past year. It provides a more holistic view of a company's cash flow capacity compared to a single quarter's data. 2. Market capitalization. COWZ uses the company's current market capitalization, which is the total market value of all its outstanding shares. This is calculated by multiplying the current stock price by the number of outstanding shares. 3. FCFY calculation. Once you have TTM free cash flow and market capitalization, you can calculate FCFY using the following formula. FCFY equals TTM free cash flow / market capitalization. A higher FCFY indicates a company generates more cash flow relative to its market size, potentially making it more attractive for COWZ. Key points. COWZ prioritizes companies with high FCFY, suggesting they are efficient cash generators and might have more capacity to pay dividends or reinvest in future growth. This focus on value aligns with COWZ's overall investment strategy of targeting cash-rich companies that might be undervalued by the market. Additional notes. There can be different methodologies for calculating free cash flow. COWZ might rely on specific data sources or make adjustments to the standard calculation for its purposes. It's advisable to consult the ETF provider's documentation for any specific nuances in their free cash flow calculation. While FCFY is a valuable metric, it's not the only factor considered by COWZ. Other factors, like the company's financial health, growth prospects, and overall business model, might also influence its inclusion in the index. By understanding how COWZ defines and calculates FCFY, you gain insight into the selection process and the type of companies the ETF targets. This can help you assess whether COWZ aligns with your investment goals and risk tolerance.